Markets logged second worst day in 2022 to snap three-day winning streak. Sensex tanks 770 points. Nifty closes below 17,600, dragged by IT and realty stocks. Tax relief for the middle class possible next year. Revenue Secretary tells Business Today TV that the government is considering tax swaps after gauging the impact of COVID on the economy. Finance Secretary concedes to big leakages in MNREGA scheme, tells Business Today managing editor that corruption will be addressed after talks with states. It's a big Business Today exclusive. CBDT chairman says 30% tax is not high for cryptocurrencies. Government was considering a much higher tax rate. India's January unemployment rate falls to 6.57%, lowest in 11-month low, as the country gradually recovers with the easing of COVID restrictions. Markets snap a three-day winning run to log their second worst day in 2022. Sensex tanking 770 points to tumble below 59,000. Nifty declined over 1% to shut shop above 17,500. As the bulls took a breather, losses in IT, financial and oil and gas shares pulled indices lower. All sectoral indices declined except for auto. Nifty IT under pressure, declining over 2% after a sharp fall seen in Nasdaq futures post-week earnings by Meta. Nifty Financial Services declined over 1%, snapping a three-day winning run. Nifty Realty also took a beating, declining over 1.7%. HDFC, ONGC, SBI Life, Grasim, Infosys, some of the top laggards in trade today, all down about 2.8% or more. The union government is confident that the worst of COVID impact on the economy is behind us. In an exclusive interview with Business Today TV, Finance Secretary TV Somanathan said that lessons learned from the previous COVID waves are invaluable for the coming times. Listen in.
With me today is the Finance Secretary, Dr. TV Somanathan, the man behind the budget and perhaps all the major numbers in it. What is your own assessment and the government's assessment with respect to the COVID impact on the economy? Are we out of the woods? Can we say that FY23 will be the year of growth with the pandemic more or less behind us?
I can tell you my hopes and then I'll separately tell you my expectation. My hope is that it is behind us. That's a hope. But as a serious, planner of finances, one has to also take cognizance of a pessimistic scenario. But even in a pessimistic scenario, and even if there were recurrence of waves of COVID during the year, I think two things have changed. One is the level of vaccination in the adult population is becoming very high. I mean, at 2 doses, 60 plus. And soon it will be 90 plus with 2 doses. And regardless of whether it's a new variant, old variant, vaccination is clearly showing up as a preventer of serious illness.
But a lot of post-budget commentary is saying this is an absolutely valid argument. But what about the loss of consumption and the lingering effects of job losses and income losses? People are saying that your budget is not providing for a consumption boost.
Consumption boosts can come directly through infusion of cash to some people, or they may not come. Now, the experience in the West with direct cash transfers is a lot of it was saved. So it's not as if a direct cash transfer results in consumption. Even in India, in the first wave of COVID, we made a massive cash transfer to the Jan Dhan accounts over a period of 3 months. There was a study soon after that which showed that 40% was saved. So it's not as if making a cash transfer results in, it could result in saving as much as
Is the government making an ideological choice after giving money? It's someone's money to spend. Why would the government want to know whether you spent it or saved it?
But you were talking about consumption. I wasn't talking, you spoke about consumption. So I'm asking you, I'm telling you that there is no guarantee that cash infusions result in consumption. They result in income. But whether that income is spent or not is what matters for the economy. On the other hand...
May I interrupt you to say that some economists would say that you're trying to evolve a new macro framework because cash in the hands of people is supposed to be a booster in times of slowdown and recessions.
I'm not evolving a new economics. John Maynard Keynes spoke about marginal propensity to save. And if there's a marginal high, then the multiplier effect of cash transfers is low.
Does our economy need spending or saving at this stage?
It needs spending, and that's why we are spending through capital expenditure.
But only the government is doing it. Why not the private sector?
The private sector will have to begin spending when they see the investment opportunities, which is what we are trying to kickstart with our public expenditure.
Dr. Somanathan, and I say this on record, that this government has made numerous attempts to support private investment. Most of those have had results, including the banking thing. I will not go into the details. Why, in your assessment, is private investment not happening to the level that you would yourself have perhaps expected?
There were a few years when we had what is called the twin balance sheet problem, where the banks' balance sheets were bad, the corporate balance sheets were bad. So obviously investment was not happening because banks couldn't lend, corporations couldn't borrow. So that was one phase. As we began to get out of that phase in 1920, we were hit with 2 continuous years of the pandemic. Now, the pandemic and its physical restrictions, I repeat, the biggest influence of the pandemic on the economy, apart from actual lockdowns, is the restrictions on a number of forms of consumer demand. So demand stimulation, in my view, will come more from the removal of restrictions. If we can go to a cinema, then you can buy some popcorn, which means there's a popcorn supplier who starts supplying it, who engages workers to supply it, who begins to purchase corn to provide the popcorn. Now, if that is closed, that is closed. You can't inject cash and expect that industry to revive. So, removal of restrictions is the prime requirement for demand to restart. Now, if demand restarts now, when balance sheets are in much better shape, banks are in a better position to lend, the capital markets have funds to lend because of lots of funds coming in, we are likely to see a revival of private demand. And
by when, sir?
It's hopefully by the end of this year.
Okay, and to what extent?
I am not an astrologer, and economists are very poor at prediction. So all I can say is we are creating all the right conditions. We are putting in a strong program of public expenditure on the capital side, which will create productive assets in terms of telecommunications, roads, railways, and widely dispersed state projects with the 1 lakh crore of state capital expenditure loans. So this should create a very broad base of demand, because capital expenditure creates demand. It leads to payment of wages. It leads to purchase of materials from companies, including MSMEs. The MSMEs then spend that money. They engage people. They buy components. They buy raw materials. That kickstarts consumption. That creates the demand through which capital investment by the private sector is likely to build up, because when they see their capacity utilization increasing, they see the need to invest.
MNREGA, for example, beyond the numbers, there have been reports, perhaps you're aware of that, about substantial leakages in a particular state or two. Have you had occasion to look through it? Is it a matter of concern? Is there a change in strategy needed?
The leakages in MNREGA are a matter of serious concern, and we have taken cognizance of those reports, and subsequent anecdotal accounts from other states indicate that those reports are not peculiar to one state, and in fact are more widespread. So yes, that is one area of attention which I'm sure the Ministry of Rural Development will be looking at very carefully in terms of tightening systems and making sure that what is spent reaches those whom it is intended to reach.
The National Statistical Organization's periodic labor force for FY20 released in July 2021 showed a rise in the share of labor force in agriculture despite policy objectives of moving them out of agriculture.
This is for 2021 years.
Yeah. Real wages in rural areas have turned negative across all agriculture and non-agriculture operations so far in FY22. The question asked in the report, and I'm paraphrasing it, is it not perplexing, particularly when a disturbing trend and distress is building up in rural India, that some of the spending seems to have been tightened?
So I think the years on which this report appears, I have not seen the report.
Okay.
But I'm sure you're reading it correctly. I'm not disputing that. But I would say that the years you're referring to are the years when the whole world has been subject to distress. India has not been an exception. So to choose 2021 and 21-22 and say that there is distress, I admit that. I am unhappy about it. But it is not something that governments in any country have been able to prevent. It's a difference of degree between one polity and another. So on the larger question of what is to be done in agriculture, the government remains committed to improving the incomes of farmers. The MSP program remains very strong. It's fully funded. Record levels of grain procurement are being done. And the MSP is being extended beyond the narrow range of 2 or 3 North Indian states. Recently, like just this morning, I had somebody from Assam telling me that for the first time, MSP procurement has been very successfully done in Assam. Now, this is the way the government is moving, and there are adequate monies provided to back all the farmer programs. The PM Kisan program has finally reached some states where the state had decided not to use it earlier. So that is being done, and the agriculture budget is up. Now, there is a portion of the distress, particularly 2021, is affected by the migration that happened. It is affected by the peculiar circumstances of that year. I wouldn't draw a trend based on that, nor would I minimize the issue of improving agricultural incomes. It is a long-term thing, and we are working on it, and we are very committed to improving agriculture.
The finance minister has been criticized for not announcing any relief measures for the country's salaried and middle classes in the union budget. But tax relief for the middle class may be on the cards next year. In an exclusive conversation with Business Today, Revenue Secretary Tarun Bajaj told Business Today TV that the government is considering tax SOPs after gauging the impact of COVID on the economy. Listen in to an excerpt of that conversation.
As far as personal income taxation is concerned, it appears that no major relief, in fact, no major relief has been granted. This flies in the face of taxpayers of a certain bracket expecting some additional giveaways from the finance ministry. Why was that not done?
Okay, let me explain to you in some detail this particular thing, because I've been asked this question
many times.
Many times. But it'll be good to tell your viewers why we decided what we decided. So the choice for us was to give some relief to the taxpayer. Or the other choice was that we are going through the pandemic, so give it a pass for the current year. And whatever revenues that we are able to generate, we spend it through the expenditure route. So the expenditure route ensures that we are able to reach in a focused manner to the vulnerable sections. So that is very important if you want to give food, fertilizer subsidy, food subsidy to the poor. That's also very important. And secondly, which is the basic, I think the central point of the budget is to increase the capital expenditure. So if we thought it's better to do the more capital expenditure, more expenditure, so that the wheels of the economy keep moving. If the wheels of the economy keep moving, we'll have better GDP growth, we'll have better incomes, we'll have better expenditure. And maybe in the next year or the year after that, we could look at the giving relief to the middle class. But let me also say this, that this was not the only reason that we did not give relief. We could have still given some bit of relief. We have come up with a new tax regime for the individuals and for the HUFs last year.
Yes.
And we've had the first filing of the returns of that in the current year. The whole idea of the new regime is that we want to wean away people from the exemption regime and bring them into a non-exemption regime, which will be a much simplified taxation policy and the taxation administration that will work. Since this being the first year, and unfortunately the returns last year it was extended to 31st December.
Because of the pandemic.
Because of the pandemic. And also some of the returns are still coming. 31st March is the last date with late filing fee. So once we have those returns, we'll get to know how people have actually reacted to our new regime. Once we know that, we should be able to make some changes in the new regime, because the whole idea is not to give any more concessions in the older regime, because then what it happens is that the new regime becomes even more difficult for people to accept if I keep giving the relief in the older regime, which is full of tax exemptions. So these were the basic reasons I wanted to tell you.
Quick follow-ups. So far, what has been the trend with regard to acceptance of the new regime? I don't know if the budget documents have those numbers. They perhaps don't. Do you have a sense of how many people have opted for it?
Before I say this, I also want to tell you that on the corporate sector also we made similar changes.
Yes, of course.
So that was made 2 years ago. So we have 1 year data with us. So that 1 year data shows to us, which is the return that they filed for the financial year 1920 and they filed it in 2021, that almost 65% of the income has moved to the new regime.
For corporates. But only 16% of the assessees have moved to the new. So that means the larger assessees have actually moved to the new regime. And also this, we expect that in the current year, these numbers would have gone up. Why I say that is because there would be a sunset clause for the exemptions that they have taken. Correct.
And so once I have utilized or exhausted my exemptions, I would then move to a lower tax rate, which is 22% as against 30%. So in the next 1, 2, 3, maybe 5 years, we should expect that a whole lot of people on the corporate sector would move to the new tax regime. On the on the individuals and the HUFs and the others that we have, we don't have data. We'll get the data very soon. But my own expectation and hunch based on my calculations at the back is that people with income of about 8-9 lakhs would not have moved to the new regime. Because with 8 or 9 lakh of income, if you take exemptions, 1,50,000 of ATC, which
helps you save.
It helps you pay no taxes.
Right.
While in the older regime, the tax rates are lower, but you have to pay taxes because the exemptions are not there. So these people with 8-9 lakhs would not have moved. But my own expectation is that people with higher incomes, if they are not taking the exemption of, say, a housing loan or an LTC, should have moved to the new regime. Once we have greater granular data, I think we will be able to take a call as to what more tinkering do we need to do so that we are able to get more number of people to accept the new regime, which will be simpler. It will have less of litigation. It will have less of interactions with people with the department. So it will be win-win for both of us.
Clearly, you have explained it very well, and that brings me to the next question arising out of your answer. You mentioned next year or the year after that. Would it be a fair question that if there would be relief for the middle class on the personal income tax front, it would coincide with election year?
Well, I am an executive. I am not a political executive. So I would not like to say this. But why I said next year was basically because we'll have more data to analyze. But it is also possible that we may still go ahead and because I personally feel that we need to make many changes in my tax code, and a decision can be taken at that stage. It's too early, too premature at this stage. A decision can be taken whether we want to do some small tinkering or we want to do a wholesale change and come up with a new DTC code. So that decision, I think, will be closer to the day of the next budget.
We take a very quick break here on Business Today. Back in just a moment. The Beijing Winter Olympics are scheduled to take place from 4th to 20th of February 2022. Around 2,900 athletes from 85 countries will travel to the Chinese capital. With this, Beijing will become the first city in the world to host both Summer and Winter Olympic Games. For this occasion, several venues from the 2008 Games have been refurbished. The Olympic venues are divided into 3 zones. In the capital, ice sports will take place. The national stadium known as the Bird's Nest will host the opening and closing ceremonies of the Games. The Water Cube, the National Aquatic Centre, has become the Ice Cube for the curling events.
The National Speed Skating Oval is the only new venue in the capital. The Big Air Snowboard and Big Air Freestyle events will be held in the remains of a former steel mill. The alpine skiing, bobsleigh, luge and skeleton competitions will be held 75 kilometers from Beijing. China's first ski slope has been built for this event. Fans of freestyle skiing, freestyle snowboarding, cross-country skiing, ski jumping, Nordic combined and biathlon will have to travel to a popular ski resort in Zhangjiakou, which is around 150 kilometers from Beijing. A high-speed train line has also been built for the occasion, allowing travel from one venue to the other in an hour's time. Each of the three venues has an Olympic village. The Paralympics will follow from 4th to 13th of March 2022.
बिजली गिरा के नाचे मधुबन मेरा दिखा नाचे मधुबन मेरा
Welcome back. After the budget announcement on taxing cryptocurrency profits and loss stunned investors, the top tax officer of the Indian government has told Business Today TV that the 30% rate is not high, adding that the rate could be even higher. My colleague Sakshi Batra was in conversation with Chairman Central Board of Direct Taxes, J.B. Mahapatra. Listen in to an excerpt of that conversation.
Taxation does not add or it does not attach any legitimacy, any legality to the transaction which has been effected for accounting for surplus or a deficit in a crypto trade. We, as part of the department, are not mandated to be questioning the legality of any business, any sector of the business, or any profession, or any transaction. All we have been mandated is to look at the taxation aspect of the surplus which is generated after a trade.
We know, sir, that there was some sort of a regulatory framework or a legal framework already in the works, a cryptocurrency bill. It has not come in the budget session, so we don't know when will it be coming soon or not. But the government has instead gone ahead and taxed these cryptocurrencies before bringing out a bill. Could you help us understand why has the government gone ahead? What is the rationale behind this?
As a department, let me tell you that for a long time we have been working on the various intricacies and the various working of this crypto trade. For the last 5 years we have been working at it. And from different jurisdictions, we have mounted semi-intrusive actions into their affairs, into many exchanges.
Okay.
And we are now having a working knowledge of how the crypto trade functions,
Okay.
how the exchange is managed, how investors make money or lose money. Our data will now be supplemented by the legislation.
Do you have any estimate of the number of people who are currently investing or trading in cryptocurrencies? How big is this ecosystem right now?
We have some knowledge about the number of exchanges working in India, and they are said to be numbering 40.
Okay.
And out of the 40 exchanges, 10 are significant exchanges. And the biggest one has a turnover of 34,000 crores per annum. So the size of the market is quite large. Unconfirmed reports would say that 10 crore of the population, they have invested in crypto in one way or the other. Legitimacy of the source, that is always we will ask. And if the investment is from illicit sources, not only the trade surplus will be taxed, but the illicit investment also will be taxed. So that way, income tax getting into the crypto trade will bring order and discipline to the market.
But how are you really defining these virtual digital assets as of now?
Any code or any information or any formula which is generated through cryptographic means and which has of inherent value and which can be electronically transmitted, stored, etc., including the NFT.
What is the rationale behind taxing cryptocurrencies at 30%? Is it because the government really thinks that this is speculative income and therefore it has been taxed at this high rate?
See, taxing rate at 30%, I don't think that this is a high tax rate,
Okay.
right?
Okay.
Companies are being taxed at 30%, right? Firms and LLPs are being taxed at 30%. You think it is the maximum? Is the maximum? No, 30% is just one of the tax rates, and I don't think 30% is the upper end of the taxing powers of the government. No, it could have been more. It could have been more, right?
Okay.
But we pegged it at 30%, right?
Initially, but there could be a revision upwards.
That could be revision. Of course, there could be revision. But this correlation of 30% to gambling or as some people are alluding to that this is a sin tax and all.
Yeah.
I think these are misplaced.
Okay.
These are misplaced. This is a tax break we thought would be reasonable. Apart from getting taxed at 30%, what other things are there that the losses will not be allowed, right?
Yes.
It will not be allowed to be set off or carried forward. So these are two things which are attached to the crypto trade.
So what exactly is needed now to make it more clear that, it's not the right thing or the right direction right now? It is neither good for you nor the economy.
See, we are in no position as a department to be advising investors whether to invest or not to invest, right? But we are now providing a framework through defining crypto, the virtual assets, the machinery section for taxing, and also through the TDS mechanism that we know the outreach, we know the coverage, we will try to understand the depth of the market and how it operates. That will give us, the policy planners, a good idea to build a good policy around crypto.
That's all we could pack into this edition of Business Today. Thanks so much for watching.